Welcome back to Business Week here on Arise News, and I'm joined now by the founder of Beyond Limits, Dr. Juliet Ehimuan, a renowned tech industry leader with over 25 years experience, including a remarkable 12 years at Google, primarily as director for West Africa. Great to have you back on Business Week this morning.
Great to be back, thank you.
So, as usual, we love our tech stories because
Yay.
it's you. The first story is Instacart, the US delivery firm, which is targeting quite a whopping valuation of $9.3 billion. What's the significance of this?
Yes, so it's certainly a great valuation, and it's a story of recovery because in 2021, Instacart was actually valued at $39 billion.
Oh, wow. Okay.
For some context, so Instacart is a grocery delivery service, right? And they have a network of over 900 retailers and grocers and about over 600,000 shoppers. So as a user, you go on the platform, place orders for your groceries, as you normally do, and then they would route the nearest shopper to you, who would go to the various retail stores and pick up your items to deliver at your doorstep. So it's almost like e-commerce and logistics together, like Uber for grocery shopping, that sort of thing. And of course, during the pandemic, you can imagine, with the lockdowns, people couldn't really go out, right? So there was huge demand for the service. It was convenient. It was great. You know, you could shop from your favorite retailers because of the huge network. And so the valuation was 4 times what it is now, because following the pandemic, the demand dropped quite naturally. But the last year has been a recovery year for them, which has been great. If you look at January to June this year compared to the same period last year, they've grown by about 30%, and they've gone from a negative net income of $74 million to a positive net income of $242 million.
Yeah. And
so revenue is up. The trend is quite positive, so it's a great time for them to be IPOing, and I think they're really going to do well. And if you also think about, you know, the prospects for the e-commerce space, the e-commerce economy is valued at about, at the end of last year, it was valued at about $17 trillion.
Is that in America or globally?
Globally.
Oh, globally.
Globally,
okay,
about $17 trillion. So it's a huge opportunity.
Huge opportunity, obviously, and it's offering convenience. Do you think that sort of model would work here? Since more and more countries are migrating to e-commerce.
Absolutely. I think even here, we're seeing e-commerce on the rise. You know, Jumia was valued at $5.8 billion recently. And, you know, we're seeing a lot more online transactions. So I think definitely it is a business that has a low barrier to entry.
Yeah.
Right? And so there's likely to be a lot more competition. But I would imagine a lot more players coming into that space, even in Africa as well. But they have a first mover advantage, which is working for them.
Clearly.
And I think they're going to be around and doing well for a long time.
Let's see if they spread their market opportunities beyond the US market into the continent. Well, another tech story, Airbnb, of course. Airbnb is short stay holiday rentals. They've appointed one of your former colleagues, Google executive James Manyinka, to the board of directors. He's meant to be an artificial intelligence guru. So what is the connection here between the Airbnb business and this appointment?
Yes, so certainly it's a great appointment. And James has been advising Airbnb since 2018. So it's not a new relationship.
Okay.
And the CEO of Airbnb talked about their interest in investing in artificial intelligence a lot more, in embedding that into their operations. And, you know, the last time I was here, we talked a bit about generative AI and the fact that, you know, it has a huge transformative impact on businesses. So Airbnb is really looking to tap into that in a big way. They're looking at, you know, creating, you know, personalized interfaces for consumers. They're looking at having, you know, almost like an AI concierge, right? That connects you with the right homes or the right experiences and right places. So you can see that they're starting to think more broadly, beyond homes to even experiences and other places of interest. And, you know, if you think about their model, the fact that there's such diversity in terms of the portfolio of listings, right? You know, it's, you know, individuals around the world listing their homes, right, for rentals. So there's a lot of diversity at play. And they need to ensure that there's some minimum viable standard for customer experience, right? And, you know, artificial intelligence can really play a huge role in just really helping to, one, identify potential listers that have not even come on their network yet, so that they increase their pool even further, and then ensuring that there's an enhanced customer experience.
And hopefully with this appointment also trying to keep ahead of the competition, because we're seeing a lot of incumbent hotel, the traditional business model, also trying to create new types of Airbnb models.
Exactly, exactly. So they have to stay ahead of the game. They have to continue to innovate, to differentiate themselves. And I think this is it's a great appointment, and I think we can certainly watch this space.
We'll definitely see how artificial intelligence is shaping the hospitality sector. Oracle, the stock fell, revenue figures perhaps not as buoyant as we would like, but still pretty healthy.
Absolutely. So usually stock performance tracks overall, business performance, revenue growth. So it's not surprising, but the change was quite drastic, right? So the Oracle announced its revenue at $12.45 billion, as opposed to $12.47
That's not a huge difference.
So they hit 99.8%.
Which is pretty good in this type of global economy.
Absolutely. And so, but the market fell by 9 percentage points, and they lost about $30 billion of value. So that's quite drastic. But stepping back and looking holistically, I think they'll recover from this. I don't think it's something to panic about, because they've been making some very strategic bets. They partnered with Microsoft Azure, the cloud platform. And last year, they also acquired Cerner for $28 billion. Cerner is an electronic health record-keeping software. And that was also their foray into the health space. So they're making some very strategic bets. And also to talk about the revenue drop. With Cerner, trying to migrate that into the cloud, you're going from a licensed-based model, right, where you can get your revenues upfront, to a subscription-based model where the revenue comes in bits over time, right? So that's also, impacting their books. So I think if you put things in context and you look at their performance over the last 10 years, it's still a positive
It's a positive, but they now also have
some dips,
companies like Amazon Web Services. You talked about Microsoft Azure, Google's Cloud. So there's competition in that space.
Yes, and I think that's the reason for the merger with Microsoft Azure, the cloud business. That's going to be competition for Amazon Web Services, VMware, and so on. So I think they're still very active.
And market expectations high, because if you see the stock drop versus the change in revenues, like they were expecting much more. So pretty sensitive to changes in revenue forecasts.
Yes, absolutely.
Interesting for Oracle. Well, we are done with tech now, and we're now going to look at aviation, the UAE.
Right.
So much has happened this week in the news locally here in Nigeria about visa bans, no visa bans. But the big issue here really is something I talked about at the start of the show around the ability of investors to repatriate profits. So companies are reacting to Nigeria's economic situation in the best way they know how for their operation. So what's the story here with Nigerian aviation?
Yes, absolutely. So, Emirates stopped their services because it was impossible for them to repatriate their funds. They have about $260 million trapped in the system. And the president did announce that he was going to make it possible for businesses to repatriate funds. And, and it's great that the government is focusing on this, because it's important. It's a serious issue. It's a strong signal to investors, right, that this place is open for business and the environment is enabling if they're able to actually repatriate their funds, and other conditions as well to enable just thriving business relationship. And so I think it's quite positive. The Dubai route is a very important one as well from the perspective of people vacationing, and also for business, right? And having Emirates back online also increases competition, which can have a knock-on effect on prices.
Yes, of course.
So all around, I think it's great that this is on the table, that the conversations are going on, and there's the spotlight on this, because we need to attract more foreign direct investment, and we need to send a strong signal that investors can really thrive in this space.
Yeah, and of course, when you think about the entirety of airport infrastructure, even just arriving at a country's airport, that's like selling the nation.
Yes,
so even the look and feel of that piece of infrastructure is very important in branding, national branding.
Absolutely.
So we have to get it right.
It's the first impression, right? And most people just go from the airport to maybe a few meetings and then they're out, right? So the experience in the airport is really important. And just overall, the travel experience, when we're talking about facilitating trade, right, beyond borders, the experience around travel is really key.
Absolutely, it's key. And I'm sure we'll get a chance maybe in the future show to talk specifically more about Nigeria's airport infrastructure issues. But it's been great chatting with you as always, Dr. Juliet Ehimuan, founder of Beyond Limits. Hopefully we'll get you back sometime soon.
Fantastic.
Thank you.